Why Bitcoin is crashing and what could happen next. The cryptocurrency market is once again facing a period of uncertainty, fear, and heavy selling pressure. Bitcoin, the world's largest cryptocurrency, has experienced a significant decline after reaching impressive highs earlier in the cycle. Investors who were celebrating massive gains just months ago are now asking a difficult question. Is this just another correction, or is something bigger happening behind the scenes? The recent drop in Bitcoin's price has affected almost every corner of the crypto industry. Altcoins have fallen sharply, trading volumes have become more volatile, and many investors are feeling nervous. Some traders who entered the market during the recent bull run have already experienced major losses. For many newcomers, this is their first real encounter with the harsh reality of financial markets. One of the biggest reasons for the current decline is investor panic. When markets begin falling rapidly, fear spreads quickly. People start worrying that prices will continue dropping, so they rush to sell their assets. This creates a chain reaction where more selling leads to lower prices, and lower prices create even more fear. The result is a market that can decline much faster than expected. Many experienced investors often say that the market moves based on emotions rather than logic in the short term. During a bull market, greed pushes prices higher as investors rush to buy. During a correction, fear takes over and causes many people to sell at exactly the wrong time. This cycle has repeated itself throughout Bitcoin's history. Another major factor behind the recent weakness is the behavior of institutional investors. Over the last few years, Bitcoin ETFs opened the door for traditional investors to gain exposure to cryptocurrency without directly buying Bitcoin. Billions of dollars flowed into these investment products, helping fuel Bitcoin's rise. However, institutional investors often think differently than long-term crypto holders. Many treat Bitcoin like any other financial asset. If better opportunities appear elsewhere, they may move their money quickly. Recent outflows from Bitcoin ETFs suggest that some investors are reducing their exposure to cryptocurrency and moving capital into other markets. The liquidation of leveraged positions has also played a significant role. Many traders use borrowed money to increase their potential profits. While leverage can amplify gains, it can also create devastating losses. When prices fall below certain levels, exchanges automatically close these positions to prevent further losses. This process, known as liquidation, creates additional selling pressure and can cause dramatic price drops in a short period of time. Billions of dollars in leveraged trades have been wiped out during recent market volatility. This forced selling often accelerates downward momentum and makes market corrections appear much worse than they would otherwise be. Another important factor is changing investor sentiment. The Crypto Fear and Greed Index, which measures market emotions, has moved toward fear territory. Historically, extreme fear has often appeared near major market bottoms. However, there is no guarantee that history will repeat itself exactly the same way. Market sentiment is extremely powerful because it influences decision-making. When investors constantly see negative headlines, predictions of crashes, and reports of major losses, confidence begins to disappear. Even strong assets can struggle when overall sentiment becomes overwhelmingly negative. At the same time, traditional financial markets are offering alternative opportunities. Large technology companies, artificial intelligence projects, and major stock market investments continue attracting significant amounts of capital. Investors constantly search for the highest potential returns, and money tends to flow toward whichever sector appears most promising. Many analysts believe that upcoming mega IPOs could also affect market liquidity. When a highly anticipated company goes public, investors often sell other assets to free up cash for the new opportunity. This capital rotation can temporarily reduce demand for cryptocurrencies and create additional pressure on Bitcoin and altcoins. Some experts have suggested that future IPOs involving major technology companies could become some of the largest investment events in modern financial history. If billions of dollars flow into these opportunities, other markets may experience temporary weakness as investors reposition their portfolios. Despite these concerns, many long-term Bitcoin supporters remain optimistic. They point out that Bitcoin has survived numerous crashes throughout its history. Since its creation, Bitcoin has experienced corrections of 50%, 70%, and even more. Yet it has repeatedly recovered and reached new all-time highs. Supporters argue that volatility is simply part of Bitcoin's nature because Bitcoin is still a relatively young asset compared to traditional investments like gold or stocks. Large price swings should be expected. According to this view, short-term fear does not change Bitcoin's long-term potential. One of the most important levels investors are watching is Bitcoin's support zone. Support levels represent areas where buyers have historically entered the market and prevented further declines. If these levels hold, Bitcoin could stabilize and eventually begin another upward move. If they fail, prices may continue falling before finding a new bottom. Technical analysts spend considerable time studying these levels because they often influence market behavior. When support breaks, panic can increase rapidly. When support holds, confidence can gradually return. The behavior of large companies holding Bitcoin is also attracting attention. Several major corporations have accumulated significant Bitcoin reserves over the years. Investors are closely watching whether these companies continue holding their positions or decide to reduce exposure during market weakness. Corporate adoption has been one of the strongest narratives supporting Bitcoin's growth. If large institutions continue buying despite volatility, it could strengthen confidence throughout the market. Conversely, if major holders begin selling, it could create additional uncertainty. Government regulation remains another critical factor. Around the world, policymakers continue debating how cryptocurrencies should be regulated. Positive regulations can encourage institutional investment and innovation. Negative regulations can create uncertainty and discourage participation. Many investors are hopeful that clearer crypto regulations will eventually provide greater stability and encourage wider adoption. Regulatory clarity could make it easier for financial institutions, businesses, and individuals to participate in the cryptocurrency ecosystem. The growth of artificial intelligence has also created an interesting dynamic in financial markets. AI-related companies have become some of the most attractive investments in the world. As a result, capital has increasingly flowed into AI projects and technology stocks. This competition for investment dollars can sometimes reduce interest in alternative assets such as cryptocurrency. At the same time, inflation, interest rates, and global economic conditions continue influencing investor behavior. When borrowing becomes more expensive and economic uncertainty rises, investors often become more cautious. Riskier assets like cryptocurrencies can experience greater volatility during these periods. History shows that financial markets move in cycles. Bull markets create excitement and optimism, while bear markets create fear and pessimism. The challenge for investors is recognizing that both phases are temporary. The same emotions that drive markets higher can also drive them lower. For long-term investors, the most important lesson may be the importance of patience. Many successful investors focus less on short-term price movements and more on long-term trends. Rather than reacting emotionally to every market swing, they develop strategies designed to survive volatility. Risk management is equally important. No investment should represent more risk than an individual can comfortably handle. Diversification, proper position sizing, and realistic expectations can help investors navigate uncertain markets more effectively. As the crypto market moves forward, several key questions remain unanswered. Will institutional investors return in greater numbers? Will Bitcoin maintain its important support levels? Will regulatory developments create new opportunities? And perhaps most importantly, will investor confidence recover? Nobody knows exactly what will happen next. Markets are influenced by countless factors, many of which cannot be predicted. What is clear, however, is that Bitcoin remains one of the most closely watched financial assets in the world. Every price movement generates discussion, analysis, and debate among investors, institutions, and policymakers. The coming months could prove crucial for the future direction of the cryptocurrency market. Whether Bitcoin enters another major rally or experiences additional downside pressure, one thing is certain: the crypto market never stays quiet for long. For now, investors around the world continue watching closely, waiting for signs of the next big move. Some see opportunity in the fear, while others remain cautious. As history has shown time and time again, the next chapter of Bitcoin's story is likely to be just as dramatic as the ones that came before.